For the last 30 years, we bought into a powerful idea that inflation was basically dead, a ghost to the past, conquered by this new, hyper-connected global world. Well, that world is shattered. And today, we're going to explore a really counterintuitive idea, that this de-globalization we're seeing, which feels painful and inflationary right now, is actually setting the stage for a massive, long-term deflationary wave. This is what we're calling the inflation illusion. And to really get it, we have to look past the daily headlines and into the deep structural forces that are completely reshaping our world.
You remember this, right? The world from the 90s all the way to the 2010s, it was built on this one simple, powerful concept: make everything, everywhere, and connect it all with these super efficient, just-in-time supply chains. The whole game was about squeezing out every last drop of efficiency, tapping into cheap labor anywhere on the planet. And yeah, it worked. It gave us an era of crazy low inflation that, honestly, a lot of us thought was just the new normal, that it would last forever. But it turns out that world, that whole delicate web of trust and efficiency, was way more fragile than any of us realized. Its fundamental assumptions have been completely shattered. That illusion of a perfectly smooth, frictionless globe, well, it's gone. And now we're all left trying to figure out what comes next. The system didn't just bend, it broke. And it broke under this relentless storm of shocks: pandemics, major wars, and then the weaponization of trade itself. You know, the Bank for International Settlements has pointed out that all of this has caused what they call trade policy uncertainty to just skyrocket to record highs. It's forcing everyone from companies to countries to completely rethink what it means to be connected. And that brings us to the absolute core question we're tackling today. Is this inflation that we're all feeling, is this the new reality forever? Or, and this is the key, is it just the upfront price we have to pay to build a fundamentally different and maybe, just maybe, a more resilient global economy? So to get to the answer, here's how we're going to break it down. We'll start with the end of that old era and look at some of history's recurring cycles for clues. Then, we'll get into the upfront price of security, why things are so expensive right now. After that, we dive into the really interesting part, the great rewiring, which is the deflationary twist that most people are missing. We'll also have to confront the social fallout, a new world of conflict. And finally, we'll put it all together in the long-term equation. To figure out where we're going, we first have to understand where we've been. See, there's a pattern to these massive global shifts, an anatomy to these structural breaks, and it's a pattern that repeats itself over and over again. You've heard the saying, history doesn't repeat, but it rhymes. Well, look at this. You see this powerful cycle, right? You get these long periods of integration, like that first wave of globalization, and they are always followed by periods of chaos, conflict, and then reconstruction. And it looks a lot like we are right in the middle of one of those pivotal moments again. Let's call it the Great Rewiring. So take that first great globalization wave from about 1870 to 1914. Capital, goods, everything was flowing across borders like never before. It looked great on the surface. But underneath all that calm, geopolitical rivalries were festering. And when that system finally shattered in 1914, the immediate result was a massive inflationary shock as every country scrambled for the very resources they had just been casually trading for. Now, the first reaction to that collapse was, you guessed it, inflationary. Nations threw up massive trade barriers, they got protectionist, and they were forced into this super costly push to become self-sufficient. But, and here's the twist, the long-term effect was the exact opposite. That pressure to go it alone forced them to rationalize their industries, to consolidate, and to find massive new efficiencies. And that, ultimately, created powerful deflationary forces. This actually reveals an even deeper pattern, one that goes all the way back to the Industrial Revolution itself. The early days were a mess. People were terrified about resource scarcity. Food prices were soaring, there was social chaos. But technology didn't just fix those problems, it blew them away. It created what you could call deflationary abundance by just radically slashing the cost of making, well, everything. So here's the key takeaway from all this history. There's a recurring pattern. The beginning of any great economic rewiring is always messy. It's costly, it's inflationary. But that second-order effect, the one that comes from the intense pressure to adapt and innovate, that is almost always deflationary. Okay, so let's bring that historical lens right back to today. We can see the exact same pattern playing out right now. This big move away from hyperglobalization, it is absolutely inflationary at first, and this is what you could call the price of security. And it's happening in four main ways. First, reshoring. Moving factories from low-cost countries to high-cost ones is, well, expensive.
Second, redundancy. We're shifting from just-in-time to just-in-case supply chains, which basically means building two of everything. That's costly. Third, stockpiling. Countries are creating huge strategic reserves of everything from energy to microchips, and that drives up demand. And fourth, tariffs. Look, the Bank for International Settlements is pretty clear on this. Tariffs mostly just raise prices for you and for businesses. They don't really change the underlying trade flows all that much. This is the bill. This is the upfront price for a more secure world.
But this is where the conventional thinking just stops. It sees the cost, but it completely misses the response. See, the Great Rewiring isn't just about moving factories around. It's about a fundamental change in the entire logic of how we make things. And this is the deflationary turn that almost everyone is missing.
This right here, this might be the single most important shift to understand. For 30 years, the whole economic model was based on what's called labor arbitrage, just finding the cheapest pair of hands on the planet and moving the factory there. That game is over. The new goal, forced on us by de-globalization and national security, is about something much more radical, replacing labor entirely with capital, with technology.
And the forces behind the shift are absolutely massive. Global demand for factory robots has literally doubled in just the last 10 years. We're seeing insane levels of investment in AI to run logistics, in the energy transition to secure power, and just straight-up automation. And frankly, it's not really a choice. It's a necessity, especially for places like China, where their demographics, their shrinking workforce, are making the old labor-heavy model impossible. The goal isn't cheaper labor anymore. It's zero labor.
But a technological revolution this big, designed to solve one set of problems, inevitably creates a whole new set. An economic transformation of this scale doesn't happen in a neat little box. It unleashes these profound social and political forces that really redefine what conflict even means.
We're moving away from a simple world where we were either at war or at peace. Now, as analysts from the Threat Casting Lab put it, we're in a world where multiple states of conflict are happening all at once. It's this persistent, low-grade information war, where the lines between friend and foe, war and peace, are just permanently blurred.
And you can draw a straight line from these economic drivers to the political chaos we're seeing. Automation displaces labor, which fuels populism. Scarcity of resources, especially something like water, drives a new kind of unrest, protests from what some are calling the thirsty. And all of this domestic strife, this internal conflict, it creates vulnerabilities that our adversaries can exploit. They don't just target our tanks or our banks anymore. They target what's called our socio-cultural code, the very fabric of shared beliefs and trust that holds a country together. So let's put all these pieces together. Let's build the equation and project what this all means for the world over the next 10 to 15 years.
You can already see the new global map being drawn. The US and China are decoupling, and it's forcing true technological independence, not just manufacturing. Europe is going through a once-in-a-generation investment cycle to reshore its entire energy supply. And you see countries like Saudi Arabia completely pivoting their economic model away from just oil wealth and towards human capital and tech. The final result isn't a collapsed world. It's a reconfigured one, a world of competing, highly resilient, and super-automated economic blocks.
And this really is the core projection. Despite all the headlines about conflict and tension, the powerful underlying trend is one of massive technological investment and ultimately deflation. And central banks who are so fixated on the short-term inflationary pain of this transition are in serious danger of fighting the last war. They're at risk of completely misreading this entire cycle.
In the end, it all comes down to this one powerful historical truth. Every single time the world has pulled apart and had to rewire itself, it has paid a painful inflationary price up front, but the reward on the other side of that pain has always been a more resilient, more productive, and ultimately a cheaper way of making things.
And that leaves us with the final, really unsettling thought. What if the real challenge of the next decade isn't fighting inflation? What if it's managing the massive social consequences of a new kind of abundance? What if our obsession with this temporary price spike is blinding us to the much bigger problem? What to do in a world where goods become incredibly cheap, but the value of human labor itself is fundamentally called into question?